What are you going to write for Monday morning about Fortress saving?
Monday morning, we'll probably be looking at Citigroup, right? And I think they're going to be the first to report. We're going to be the first to hear about the near-term trend, but also what are competitors thinking about this big announcement? How are they thinking about the competitive opportunity?
In all of this, the 5 or 8 or whatever banks that we see next week, that does redound on Deutsche Bank, doesn't it, Sonali?
Well,
gives us a picture of their competitive
advantage
system.
Yeah, that's for sure, especially because the U.S. banks are in the biggest positions of strength here. Let's be clear, we're not expecting a great week from the banks next week. With that said, they're all expanding in Europe, and so this gives them an opportunity to steal share here, but also there.
Taylor Riggs was doing a book value study yesterday, and we forget the gap in valuations here. What is the book value study that we have in U.S. banks right now, Alison?
I think if you're looking at a price-to-book metric versus ROE, and that's generally the way investors think about it, the higher profitability, the higher price-to-book multiple you have, and you see someone like J.P. Morgan sort of way out front.
Yeah.
You see Deutsche Bank, we frequently discuss the fact that they're trading at a significant discount to book. Part of that has been concerns over a potential right issue, but part of that is also that they're not profitable. And when, so banks will trade at a discount to book when people think there's a hole in the balance sheet, when they think they're going to have to raise equity, or when they're not earning their cost of capital. And this is a bank that has not been profitable for several years.
Alison, is J.P. Morgan, Fortress Diamond, still, best in class?
They are best in class, and I think they, especially when we're looking at this global investment banking business, they have sort of leading share across a number of categories. One of the things we've talked about is the improvement in their cash equities business. That was the one business where they weren't a top 3, if you look back a few years ago, and they are a top 3 now. And I think for all the U.S. banks, really the focus next week, it's all about net interest margins, just given the dramatically worsening environment that we've seen. We've already had banks sort of talking down the numbers. We've had estimates coming down into earnings. The question is that enough? We're probably going to get some negative surprises, I think, for the large global banks. The potential for more market share opportunity in capital markets, again, where the outlook for that business is soft this quarter. And, if we're going to be into a period of global monetary convergence lower, that's not great for fixed income trading. But if there is some share opportunity, that can be an offset.
Sonali, when you look at the earnings next week in the U.S., will they give us a little bit of an idea of actually what the U.S. economy is doing in terms of lending and mortgages and things like that?
We expect everyone to comment on that, certainly, especially with the interest rate outlooks and whether people will keep borrowing as well. Refinancings is something that we're looking at, and whether it'll outpace the slowdown in lending overall, or the revenue they're getting from it. But with that said, also, there is a big differentiation. I know that you were talking about J.P. Morgan, and you were saying that it's best in class. But if you look at analyst sentiment right now among all the big banks, you actually see Morgan Stanley has the most positive analyst sentiment. And I've got to wonder if that's because of the growth in the wealth management unit, where we're seeing them and everybody else doubling down.